morning, ETF fans. This is Alex with ETF Action, and coming today on August 20th of 2024. It is before market opens, and we are going to take a look at sectors today. Specifically, I thought we'd call this Tactical Tuesday. Let's take a look at where flows have been going over the past month, and then look at some of the technical data that we have on our site. Now, at ETF Action, we pride ourselves on the composition and fundamental look-through data of all of the funds out there in the US listed ETF space, the mutual fund space, and the closed-end space, but we do have technical data, so let's take a look at those charts today. So what we're going to do is we are going to look at the first sector and industry dashboard here. We are on the home page right now, but if I jump over here, I can quickly look at what's going on in sector land from a flows perspective. So in the ETF flow space, I can see that over the last month, from a performance perspective, utilities have been the best performing sector on average out of 10 ETFs. Healthcare, 29 ETFs on average is up 3.84%. Utilities are leading 6.36%. On the flip side, energy has been the worst performing sector, down 3.32%. We have materials that's down 51 bips, followed by consumer discretionary, which is still up 57 basis points. Now let's extend that out a little bit further. Over the last 3 months, real estate's been the top performing sector, up 8% on average. Healthcare, 6.7%, and tech. Now let's take a look at a flows perspective. We can see that tech has always continued to draw in flows this year, even during the July to August downfall where we had a pullback. Investors still stayed with technology funds, technology companies, and continue to allocate money that way. Utilities saw nearly $1.8 billion in over the last month. Real estate and financials, they all saw positive inflows, whereas you can see there was some rotation going on. A lot of these other sectors saw net outflows over the last month on average. So communication services was the laggard with 1.3 billion out. Energy, 1.2 billion out. But we've seen this from a flows perspective. Let's take a look at our technical charting and let's just see what we have to offer. So where I'm going to go on our left side in the navigational pane, so I'm going to leave the dashboards area. I'm going to go to our tools and I'm going to use our trends monitor. Here we are. So what this does is it defaults, and we use beta trackers for different segments of the marketplace. Just a little navigation on this page. You have a list of your funds here. This is the overview page. It gives a number of data points and a mini chart. Then we've got moving average charts, Bollinger Band charts, RSI, which is the 14-day relative strength index, great indicator for overbought or oversold conditions. And then we have a monthly flows chart. So we default to sectors of the S&P 500, but you can see we break it down into a number of different segments of the marketplace here. But what I will say is, looking at sectors just from this overview page, again, it's a lot of the same data we're just looking at. But I can see we've got 1-day performance, 1 month, year to date. Here's our RSI, our short-term overbought, oversold conditions indicator. Our 50-day moving average, 200-day moving average, and if I scroll over, we've got some flows, and then some high-level data points in dividend yield, valuation ratio, expected earnings growth, sales growth, things of that nature. But we're going to focus on over here. So the first thing that we look at, and again, we're not a major technical shop, but we do have technical charting, and what we'll look at is from a trends perspective, are these securities, are these sectors trading above their moving averages, first and foremost. So what these two columns show us is it shows us the percentage above or below their 50-day moving average or 200-day moving average, respectively, where the stock is trading, or where the fund is trading, excuse me. So if I sort by the 50-day moving average, I can see that utilities is currently trading 5.8% above its 50-day moving average. Likewise, real estate 5.66% above its 50-day moving average. Financials 4.4. And actually, if you look across the board, all of these funds are trading above their 50-day moving average currently. Energy is still holding on 80 basis points above its 50-day. And if you look for a longer term trend, you can see that all of these funds, all sectors, are currently trading above their 200-day moving average. Utilities, again, the highest above it, 13.1% above its 200-day moving average. And then going all the way back down to energy, it's still above 2.6% of its moving average. A lot of times if a fund or a stock falls below its 200-day moving average, it is a technical indicator. It says, well, this line can serve as a level of support or a level of resistance. So seeing green on the screen here shows us that they still maintain these support levels beneath them. It's when you start seeing these drop, that's when things can get a little squirrely. Likewise, if you see the 50-day moving average cross below the 200-day moving average, that's another bearish cross if it goes to the downside or if it goes to the upside. All right, from an RSI perspective, short-term overbought, oversold conditions, I'll sort by this. Now, RSI, 14-day RSI, or whichever length of period you're using, a rating of 70 or higher is considered overbought. A rating of 30 or below is considered oversold. So right now, we can see that utilities is the only sector that, and this just happened yesterday, crossed over into overbought conditions according to this indicator. There are other funds that are nearing overbought, staples, healthcare. So those defensive sectors that we saw have been doing really well over the last month, especially when we saw the pullback in the markets. Utilities, staples, and healthcare really had their day, and it's showing it because they are approaching overbought conditions. Now on the flip side, energy is at a 54, that's neutral. Again, anything between 70 and 30 is neutral, and a lot of times sectors or funds or stocks can hang out in a range close to overbought conditions or oversold conditions, and that's kind of when they've been trending lower for an extended period of time without actually crossing into those short-term quick movements of overbought or oversold. But you can see across the board, things are pretty neutral, starting to rise up into that higher territory of neutral though, with just utilities crossing into it. And if we want to visualize this, if I select my tab here, moving averages, what we've done is this page is just all charts looking at moving averages for all of the funds that we just looked at on the overview page. So I can see on here you've got your price chart, you've got your 50-day simple moving average, and your 200-day simple moving average charted for me. And you can see we had once it fell through that 50-day moving average this past month, we're looking at SPY, the S&P 500 in this chart. Once it fell through that, it went quite a ways down during that pullback, but you can see we've risen back above it and maintained. So we'll see, we need to see some extended time period to see this remain above, but based on our overview chart, all of these funds are currently trading above their 50-day. You can see how healthcare bounced off it several times and stayed to the upside. So everything's trading above their 250-day moving averages. I want to look at Bollinger Bands. Now this wasn't on that page. What this is it's looking at trading ranges, and it's based on standard deviations of movement. So what folks have found, some folks have found that when a price rises above or below 2 standard deviations away from its average, that it tends to start looking overextended, or the range is widened out or it's narrowed, so you need to pay attention to that. And you can see here the gray line is the average line, and then we've got the red line on the top and the bottom is our trading range. And if you look at these charts, it's not 100% accurate, but it does, generally speaking, show the range that a stock is going to move around within its trading range. So SPY, for example, you can see was overextended to the downside and it kind of bounced off that 2 standard deviations to the bottom, rose back up to the higher end of its range here, at 2 standard deviations above. It kind of hung out in this range for a while until it broke down in mid-July, fell through, but it did find support at the bottom level of its trading range, and it's popped right back up. If you look at most of these charts, we are within our trading range for almost all of them. You can see financials is definitely getting close to the high end of its range. Staples has blown through it already. Let's see here. We've got healthcare also blown through. Industrials nearing the top end of its range. These are pretty safe. Tech, after it's seen its rebound, it is trading currently in the middle side of its range. Notice it's a much wider range than some of these others. And utilities also through the top end of its range. So based on these charts, those same sectors we looked at, the defensive sectors, they are looking a bit overextended right now. And the last thing I want to look at is the short-term RSI charts. Again, just showing this is very short-term, oversold, overbought conditions. Again, the red area is a 70 or above. The green area, oversold, is 30 and below. And you can see a lot of these charts, once it does get up into the red area, it typically falls back down. It tries to remain in this white range for a while. So if I'm looking at current conditions, we're neutral here for SPY. We're neutral for communication services, for consumer discretionary. Scroll down. I'm nearing that overbought condition here with staples. We've got energy right in the middle, comfortably in the middle. Everything's pretty neutral as we saw on that overview page. But you can see utilities here as crossing into overbought. And it can stay in overbought for a little while. But you can see based on these charts, when it does hit, typically you see a short-term pullback. So with that, I'm going to stop, but I found this page to be a really great way to quickly see what's going on from a technical standpoint, from an overbought, oversold conditions. Are trends intact despite short-term movements? And if you have any questions, reach out to team@etfaction.com. Again, this is Alex. None of the securities I talk about today are recommendations to buy or sell securities. Talk to a financial professional before making any investment decisions. With that, have a great day, everyone.